Hello viewers, I am CA Venugopal, delighted to welcome you on my GST simplified educational videos. In this video, I am going to tell you about what are the changes that would happen to your software with regards to filing of your outward supply, which is GSTR 1. So let's have a walkthrough of all the transaction related changes to outward supply. Now, in GST regime, you have to classify your transactions into various categories. It is something like about tags which we know. So any item you can tag various names to it. You can tag it in a different way. Similarly, even in GST, you should have ability that the software is capturing the one sales transaction into various items. So let me clarify to you. Your sales firstly have to be classified based on the customer, whether it is a B2B customer or a B2C customer. So a registered dealer to a registered dealer is a B2B, and a registered dealer to a retail customer is a B2C. Now even the B2C customers have to be classified into B2C large and B2C small. Large is something where the transaction with the customer in interstate is more than 2.5 lakhs. So your customer transactions have to be classified based on the destination, basis which the respective tax of IGST or CGST SGST would be levied. You should also have a methodology to capture the medium of transaction happening, whether this transaction is happening through an e-commerce or regular. Apart from this, if there are transaction of sales to your own branch, that needs to be captured and recorded. In case the advances have been received for a specific supply, even those needs to be captured. And all these transactions have to be captured at an item level, which is HSN SAC code of an item to be captured. Let's look at them one by one in detail. For a B2B supplies, apart from the regular transaction which is currently being captured, the following is the additional information you need to create in your current ERP system. One is the GSTN ID of the recipient, which is the buyer, and the place of supply if it is done to other than the place of the registered dealer of the recipient. Especially this is in bill to ship to transactions, so that needs to be captured. And the description HSN or SSC code of each line item in the invoice has to be captured. In case if this transaction is a specified transaction where the tax has to be discharged under reverse charge, even such transaction needs to be captured separately. If this transaction is passing through an e-commerce portal, so you should have a methodology to capture and identify this transaction is passing through an e-commerce. Now, for each item, you should have an ability to flag or tick mark all these items which we are discussing. The regular information of the invoice number, date, invoice value, the taxable value, what is the tax rate, amount is already there, that needs to be captured. For a B2C invoices, I said B2C large, which is interstate transactions more than 2.5. So you should segregate what is the value of interstate transactions more than 2.5, and this needs to be uploaded each invoice wise. And for all other transactions, so you have to capture it, what is the volume of business done for each state, and intrastate, or what is the volume of transaction done if it is case of B2C small. Now branch transfers, earlier this was not considered as a sale since it was a stock transfer, no taxation. In GST, stock transfer is treated as a B2B sale if it is done to its own branch or warehouse located in other state. sometimes within the state if they have a separate GSTN. So in terms of accounting, there is no increase in sales or purchases. However, a liability is created in the supplier branch and it becomes as a receive input credit in the recipient branch. For the purpose of sales, if it's a consolidated books of accounts, it's a contra sales and purchases. Separate set of books of accounts, then the intercompany transaction you would eliminate in consolidation. The net impact on the P&L would be nil for branch transfer. Now HSN code. This is something you have heard in the GST that every transaction should carry the HSN, and which is an 8-digit HSN code. So first 2 digits represent the chapter heading, next 2 digits is the heading, subheading and the entry. These are 8 digits are split. Now anyone whose turnover is less than 1.5, there is no requirement to report. Turnover between 1.5 to 5 crores, 2 digits of the HSN has to be reported. If the turnover is more than 5 crores, 4 digits of the HSN has to be reported. And if it is exports, the 8 digits of the HSN code has to be reported. For services, it's a service accounting code. Same here, less than 1.5 crores optional, more than 1.5 crores mandatory. Even this is an 8-digit code. Now, advances are taxable in GST, something similar to the service tax. Now, in the month in which you receive advance, the GST is paid and you have a document number. The month in which invoice is raised and described in the table 5 of GSTR 2. So that transaction is to be again reversed back by mapping to the original advance document number. So it is important you have a facility to capture advance receipts in GST. Now whenever the sales are happening through an e-commerce portal, so e-commerce operator will deduct a 2% of the tax and pays to the government. So this is called as TCS. So such TCS is available for you to utilize against the output tax liability. So the data you would be having to capture for a transactions happen through an e-commerce portal is the GSTN ID of the e-commerce operator, the merchant ID issued by such e-commerce operator. And you also have to report on the type of series of invoices you are using, what is the starting number and the ending number, what are the total number of invoices, what are the cancelled invoices, what are the net invoices issued during the period. So let me iterate, if this all has to happen, the technology is a key role to ensure the GST is successfully implemented. Thank you very much for watching this video.